I think overall the budget, there was a lot of expectations and a lot of expectation or dejections in the budget. To that extent, budget's not done any much changes, which is in a way markets taken that in their stride. There was a lot of unexpected changes. Market was expecting, particularly the capital markets on long-term capital gains, STT and other stuff. None of that has been changed. As far as bond markets concerned, the fiscal deficit market expectation was maybe 3.5, might become 3.3. They surprised the market slightly by saying 3.2, which is good. So on a net number adjusted for buyback as well as repayments, the net borrowing, of course the gross borrowing remains more or less marginally lower than 2016-17 to 580, but the net borrowing at 330,000 crores, which is pretty good news for the market. Of course, bond market did reacted first to the net number, and then when they realized that gross number was not really available as the document was taking time to come in, it did sell off a little bit. But once the gross number of 580 was there, I think markets taken in their stride and it's kind of again recovering a bit. Of course, from a bond market perspective, the bigger event would be the policy, which is there on 8th of February, which is 4 working days. So that's where one has to now see whether we see a 25 basis point cut, or what is the policy stance. They're waiting for the Fed to move, or are they actually going ahead and doing the cut. So that's something the market will wait for, and market's going to be a little bit jittery till the policy is out. In terms of another thing which really helped reducing the borrowing is also your small savings. The budgeted number was around 22,000 crores for 16-17, which corrected almost like 90,000 crores on the budgeted number. As far as next year is concerned, they have provided for 1 lakh crores for small savings to generate. I think with demonetization and the cash going back into the banking system, a lot of small savings and financial product would see some flows. So I won't be really, people are a little bit skeptic about the current number, but I would say people might actually get surprised when they see the multiplier effect of the deposits being made in the bank. So overall, good budget. I think the anxiety of some tax changes which would have been against the market, that's not there. So that's why I think you see the relief rally and the equity side kind of thing. But more importantly, on the bond side, on the taxation, the 5% withholding tax which was there for masala bond and Indian government bonds bought by FPIs, that has been extended, which was getting expired on 30th June 2017. So that's been extended up to 30th June 2020. So that's a good news. Otherwise, it goes back to as a normal day.